Hi, guys, and welcome back to Marantz. Rantz, plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. This is a one-take session, no edits, no cuts, about, well, GameStop. The earnings report's coming out real soon. I believe it's at the end of this month, but I always try to get out a month early, my preview, my estimation of where the company's going to be, and our track record precedes us. If you guys know, we're usually really close, and it's well beyond the surprise that is, whatever the Wall Street number is, we always surprise it and we beat it. If you guys do not know that, GameStop has surprised Wall Street 4 quarters in a row. And what does surprise mean? It means it beat out the expectations. In some cases, at a double beat, earnings per share and overall top line revenue. So for right now, for this quarter and this report that's coming out, I'm very excited. This is the moment I've been waiting for a very long time. GameStop is going to announce profitability for the whole year, the trailing 12, the annual 2023 10K, and everything moving forward. I think they'll have a profit, but I'll leave it where it's at. We're going to go over the numbers, but I'm going to show you everything I've got. But I also want to destroy this narrative really quick, just so everyone's clear. I'm an avid GameStop investor. I'm a shopper. I'm a fan. I've been shopping there my whole life. We're gamers. That's what we do. And that's why it's so near and dear to my heart. Yes. But this investment for me is not a swing trade. It is not a day trade. This is not something I'm looking to cash out some money when the stock takes off or any of the above. No, this is a forever investment for me. I'm building my wealth. I'm building my portfolio with GameStop so that my kids and my family understand just how valuable this company can be and will be. That's just me. No one has to be me. I'm an individual investor and I feel good on my approach to it. But let's go ahead and take into consideration who Ryan Cohen is. Me investing along lines with Ryan Cohen, that's how I've been doing this investment for a while now. Ryan Cohen's been in charge of GameStop. Well, considering March 28th is when they say earnings is going to happen, that would be his 6th month to the day that he's been in charge of the company. I mean, being the CEO and the chairman of the board. And with doing that, he's taking zero pay. He owns over 12% of the company and he's doing it the right way. Guys, he has a history of e-commerce and being profitable. Yes, I know people don't see it that way because they're saying, well, when he sold Chewy.com, it wasn't a profitable company yet, but the infrastructure was built. The value was there. And that's why they made $3.2 billion off that deal. But when you look at GameStop, the infrastructure's here. Everything's built. Gamers are born every day. So the sky's the limit. It's infinity from here. So I want you guys to know that GameStop has surprised Wall Street 4 quarters in a row. And what does surprise mean? It beat out their expectations. So with that being said, I think this quarter, again, will beat out Wall Street's expectations. And we're going to talk about all of it in detail, number by number, line by line. But I also want you to know just who Ryan is and why I invest, that route. 4 months in, this is his report card. And his report card is going to show you tremendous profit. So much so that now everyone's changing their tune, right? Wall Street's telling you the trailing 12 is going to be positive. The annual 10K is going to be positive. It's going to actually show a profit. They're going to have a PE ratio, all of the above. But yet I still see people, even today on Twitter, they're like, well, Marantz, they didn't announce a new revenue stream. And until they do, it's a dying business model. And I'm just like, this is crazy. You realize that 30% of their profits are video games, yes, physical media, but 70% is actual hardware, collectibles, and accessories. So there is still a business model for it. And when you sell around $5.7, $5.8 billion worth of profit, that's still a business, and an adequate one at that. So we're going to go over these numbers. And when you see the profit and you actually see the bottom line, I'm just going to tell you the common phrase that I've been saying for 3 years. I told you so. Let's go. So here's Ryan Cohen. Good looking lad. I know he's there. I know he got a haircut recently. But this is quarter 4, 2023 earnings preview. Now, I know people are going to focus. Here's the focus and here's the transition. Quarter 4 is going to blow it out of the park, guys. What they're going to try to do is they're going to try to drag on to you what quarter 1, 2, and 3 were for this fiscal year. Or I would say this calendar year for them. But you don't have to factor those in just yet. Factor in this quarter right now and moving forward what they will be, because that's exactly how you invest. You invest based off of the future projections of the company and the stock, and it's going to be mountainfuls of cash and profits itself. And I'm going to show you that. But people are always going to try to play around and go, you know what? They earned 100. Like, I'm going to come out with a crazy number, but my number is going to be accurate. And you're going to go like, wow, they actually earned that much money. So let's just use Wall Street's projections, by the way. Wall Street thinks that GameStop's only going to make 28 cents a share this quarter. Well, 28 cents a share means $85 million worth of profit. When you look at the trailing 12, that's going to cash in around $40 more million than last year. $40 more million based off of what they're already down about 8 million. You're looking at around a $30 million, 10 cents, 11 cents a share for the whole year. So that's the number that's going to be pushed out in front of you. They're going to try to mask what quarter four is, and they're going to be like, well, they only earned, 11 cents a share for the year. Don't get confused with the difference here. You want to grade GameStop, grade it off of this quarter and everything moving forward. And why do I say that? Because I've been here for this long. I've been here for quarter after quarter after quarter, and I know exactly what GameStop did. And I was telling people when it was happening, I said they're hiding their expenses within their SG&A so that you can't gauge just how profitable they are. So when they surprise you with this number this quarter, it's going to be jaw-dropping. It's going to be mountain moving. People are going to look at it and say, how the hell did they make that much money? And how much more are they going to make moving forward? People are going to want to invest and buy it. And when they do, then they'll understand the numbers that are coming at them. And guys, this is all factual. This is not just, I feel it. It doesn't work that way for me. I've studied this 10K. I've studied this company for 3 years, just like a lot of you, certainly the people that watch the channel. But let's go ahead and look at it. So I'm going to break this down line by line so everyone understands what we're looking at. So first, this is the revenue. And I put up on here quarters, and I put them in pairs. I put up quarter three versus quarter four every year. So 2023, 2022, 2021, and then 2020, just for ballparking it because of what was COVID, right? So right now, just this past quarter, we came in at $1 billion. We were down 9% year over year, which is okay, because we're shrinking our footprint. We're getting more nimble, more agile. And as you know, the assets versus liabilities in this company are the greatest they've ever been, the percentage in favor of the assets versus liabilities, meaning GameStop is performing better. They actually are they're just a better engine right now. It's a better run company, more efficient, I should say. Don't let me be at a loss for words. But the cost of revenue at 796, gross profit at 281, and then they came out with the SG&A of 296, a very small number. But it shows you operating income was negative 14.7. We know that got balanced out with the interest of the marketable securities. So GameStop lost around $3 million last quarter. But I want to show you this number for a reason, because if you look here, last year, quarter four, they came in at $2.2 billion. They were down 1% in top line revenue. They still had gross profit of almost $500 million. Their SG&A was at 453, meaning their net was $46 million. Okay, that's how you create a profit from operating. If you look at the previous month before that, they had $1.1 billion less in sales. They were down 8.5. Look familiar to this last quarter? They were down. Their SG&A was 296. Their gross profit was 291. Their SG&A was 387. They lost $96 million. And if you go to the previous year, on that same quarter before quarter four, they came in at $1.2 billion in sales, almost 1.3. They were up crazy amount of money, but I don't want to talk about that. What I want to talk about is the difference between quarter four and quarter three. If you guys look statistically, $1.11 billion is the difference between quarter three and quarter four. No matter how many stores they have, it's $1 billion increase. Look at it from quarter three to quarter four. Even if I go during COVID, 1 billion to 2.1 means 1 billion in between. I even threw in 2018 to 2019 down here at the bottom when they had a lot of stores, guys, many more stores than they do today. They were at $2 billion, which was a lot in quarter three compared to what we do now, but only $1 billion more in quarter four. So there's $1 billion difference whenever quarter three versus quarter four. So if we're at 1.07 on revenue and you have $1 billion difference, meaning they're going to come in $1 billion more, they should come in at around 2.12-ish billion dollars. Now, I want you to know that number, and here's why. If we go down at the bottom, you're anticipating GameStop having a drop off of around on average 2%. 2% of top line revenue should be coming down. And when I looked at it previously, they fell off 3%. They fell off 1.2. So I'm going to go with 2%, right? I'm just ballparking it in the middle. Let's just say they lost 2% of top line revenue. Or what if they kept on pace with quarter three and they lost 9% of top line revenue? Do you see it here? 9% or 2%. Doesn't matter. Look at the total of sales would come in. Still over $2 billion. So worst case scenario, they come in at 2 billion. Best case scenario, they come in at 2.1, 2.2, whatever it may be. Now, with 2 billion there, you're going to look at the margins. The percent of gross at 23% margin still brings them 501 gross profit. 26% margin brings them 567. Now, why do I say 26%? So as we look at this chart here, we're going to see gross margin for GameStop on average every quarter so far this year, 26, 26, 23 being the lowest. The previous year, they were 22, 24, 24, 21, and 16% margin. And that was in 2022, January, the quarter four of January, right? So when you look at the margin, percentage margin, I've talked about this. The reason why you can go from 16% to 21 to 24 to 24, 22, 23, and now 26 and 26, to be fair, 26% seems to be their sweet spot right now based off of leveraging what they're doing. Now, this is omni-channel, right, guys? We've talked about this in the past, omni-channel marketing and retail of what they're doing, i.e. 1 hour delivery, same day delivery, and they let you know their inventory is on hand. Every store you go to, you can look it up online, see their inventory. And this is a working relationship. And a lot of retailers don't do this, but GameStop does. They're extremely transparent and they're competitive on pricing. So now that they're the only shop in town, or they're selling retro gaming, and or they have everything available to you, the margins increase, right? So when we look at it, you no longer have supply chain issues like you did. The inflationary dollar, when you had an inflationary year versus the interest rates they were paying for product and travel and freight and final delivery, they went from 16%, another 10% up this year alone. And I know that because I looked at this number here, this gross profit of 261. I know the 26% versus 276 and or 448 and 318 and 376, 378, depending on what quarter you're looking at. These guys are getting better bang for the dollar on cost of revenue, right? The cost of goods sold. So when I look at GameStop and they're operating at 26% margin, that means they should be coming in at around $567 million worth of gross profit this quarter. Now, that might be best case scenario for some people. This might be worst case scenario at 23%, even though they haven't been at 23% all year or below 23%. But let's just say their profit comes in at 2 billion flat, right? 2.025 billion. And they come in and they only come out with $465 million profit, or 526 because they come in at 26% margin. This is at 465, that's 23% margin. And this is worst case scenario, 526 at 26% margin. So either way, I don't care how you cut it. They're coming in at 460 or 526, or if we're really reaching 501 to 567. Either way, I like the number. I like $500 million profit, because the $500 million profit, when you actually subtract SG&A, and that's right here, SG&A right here, selling, general, and administrative costs. Okay. Now let's go ahead and go. And I know I'm saying a lot to you guys, and you guys aren't keeping up. If you are, I want to explain this to you. Quarter three, $276 million right here. That's during COVID when stores were closed, e-commerce only. Boom, 448, quarter four. So the difference was drastic, right? So the profit is drastically different. They went $18 million worth of profit here. That's all they made. So when you go to the next year, they're at 318 to 378. Quarter three to quarter four, the increase is $60 million. The increase last year from quarter three to quarter four was from 291 on growth. I'm so sorry, guys. No edits, no cuts. 360. I was looking at gross profit. 360 to 419. That's the difference there on SG&A. So about $60 million difference, right? Right here, they're $120 million difference from quarter three to quarter four. When you go and look here, there were $70 million difference. So they actually spend around $70 million more on SG&A from quarter three to quarter four on average. I'm looking at everything. Hell, when they were terrible, right, when they had private equity involved, they actually used more SG&A right here, 566 versus 527 than quarter four. That's how badly run they were. But who cares? We'll go back to what we are looking at today. So about $70 million difference from quarter 3 to quarter 4. Okay. We ran a 296 last quarter on SG&A. If we are $70 million more than that number, we're going to come in at about 365, 370 flat, if all things being equal. So SG&A should be around $370 million. If SG&A is $370 million and we make $500 million on gross profit, that means we net $130 million, right? They think we're only going to make $85 million. What number are they going off of? Are they going off of this number, 453 from last year? Are they that oblivious to what GameStop's doing and what they've cut out? Don't worry. I'll break it down for you. So gross margin has increased 26%, 26%. I can only imagine what it's going to be. Even if we take the 23 or 22 that it was last year, you're still going to make your 465, $500 million. And SG&A cannot be 450, and it won't be. It's going to be 370. It's going to be 370, 380 at max. It won't even be that, guys. They've learned to be more proficient, and they are. So I know SG&A has come down. Look at this from 4, and this is what tells me everything I need to know. At 538 on 16% for what it was. Look at this, 16% on gross margin, and they spent 538. You were never going to make a profit. 21% gross profit, 452. 24, 387, 387. We're still cutting, guys. We go from 387 to 453 SG&A. That's $70 million more because you're going into that quarter 4. You're going to spend more, but we had less margin. So there's no profit to be made. Well, let's think about it now. We went to 345. We went to 322, and now we're at 296. So you're going to tell me we're going to be $70 million more than 296? Okay. We coming at what, 360? How far is that from 453? That's $90 million less. That's $90 million to profit. Remember, we're profitable at 453 SG&A, guys, and a 22% margin. We're profitable $40 million. We were dancing in the street. I'm telling you, we're up 300 basis points from this number now, and we're down $70 million from this number here, meaning $70 million worth of profit plus the percentage. So not only that, our interest income is going up. So we've allowed our marketable securities to increase in interest every quarter. You'll see it right here from 6 to 9 to 11 to 12. Now we're going to be 13 to 14. So not only did you only make 6, we're going to make more than that too. So let's do the math. Wall Street projections are 28 cents EPS, $85 million worth of profit. Rantz preview. 2.1 billion in sales, guys. That's my number. 2.1 billion in sales. Yes, is it down? Yeah, it's going to be down about 2%. I'm okay with the number. I'm flat. That's actually at 3% down. But right now, at 2.1 billion sales, equaling 26% gross, because that's currently what we're trading at, gross margin over the last 6 months. You will now have 9 months at that margin. We will come out with $546 million of gross profit. You're going to minus the 370 max SG&A, max, and we're going to come in at $176 million worth of profit. Now we're going to add the interest, and that's going to give us $190 million worth of profit, 62 cents earnings per share. My original guess was 57 cents per share, but that's a PE ratio of 24, meaning it's perfect. It's prime for everything. If you've seen everything that's inflated on value right now on this market, I'm talking about everything they want you to buy. Why wouldn't you be buying GameStop at $14.95? At $14.95, and I feel GameStop's going to add an additional $300 million worth of cash and marketable securities for this quarter. They're going to come out at $1.5 billion cash. There is no cash burn here. They actually make $300 million a year cash. The profit itself is going to go straight to that bottom line. Book value is going to be $491. That's a 32% equity per share. They are the best buy on the market, period. That's GameStop. If you guys do not understand these numbers, watch it again. I didn't make any mistakes on this other than when I started reading back the gross profit. SG&A is completely down, guys. Okay. It's down year over year, quarter over quarter, $90 million. So if they came in at 450 last year, take 90 million off of that. That's how great it can be. I'm just letting you know. Take 90 million off of that. We made 49 million last year. Put 90 on that. That's 130. Put some interest on that. Put a little sugar on that. Understand what the actual interest. Understand what the gross profit is on cost of goods. Remember, we're at 22% last year. We're now at 26%. Give me those 400 basis points on top of the 150 I'm telling you. I'm showing you 190. I'm showing you $200 million worth of profit in one quarter. And every quarter moving forward is profitable. I promise you, I'm looking at the same company you are. They don't need a new business model. They don't need a new revenue stream. All they need is for people to believe that this is what the balance sheet says it does. Because it does. It's simple math. It's arithmetic. I did this shit in 6th grade. And I hope you guys do too. And I know I got a little edge to me. I get it. I've been holding for 3 years. And I'm going to keep holding and keep buying. I'm not just buying and holding. No, I buy it every day. And I'll buy it again tomorrow. And don't you forget it. GameStop. Can't stop, won't stop. GameStop. $200 million, millionaires. Or close to it. Peace.